of a zone. So I think a trailing stop loss can be placed somewhere close to around 1645, and every decline would again serve as a good buying opportunity. From a trading perspective, for this particular expiry, we may see a swing towards 1760, but eventually, we see this particular stock scaling towards 1900. A clear disclosure and disclaimer that we have recommended this particular stock to our clients from a long-term perspective as well, wherein we are anticipating a target close to around 1930.
All right, that's the technical view on HDFC Bank, but I think Mayuresh is ready. Hi Mayuresh, thanks a lot for joining in this morning. As I was mentioning, the focus is now shifting to banks from IT. Last time we spoke, since then the IT index is up 7%, and I'll get your thoughts on that as well. But particularly for HDFC Bank, we are penciling in a 5% kind of a growth when it comes to NII on a quarter-on-quarter basis. But margins, Street is expecting that margins are likely to come under slight pressure given the fact that cost of funds are higher now. But post the merger, we've seen a significant liquidity, right, for this particular bank. Do you think higher liquidity will act as a balm for margins, or do you think there could be some bit of pressure amid higher cost of funds?
Morning, Nandita. Always a pleasure to be on your show. Two things. One, with the expectations of how margins will play out specifically over the next 2-3 quarters in the context of the rate situation that we are in, both globally and locally, the expectations with higher cost of deposits will have an element of drag on margins. But if you compare Q2 to Q3, sequentially, I think that drop will be a little bit lesser. YOY, the drop will be a little bit more steeper. But that is what the street probably believes in. And as you see more stability happening in the NIMs and spreads in the next 2 to 3 quarters, as we arrive at a steady state margin scenario, the entire perspective then changes to what happens as rate cuts start taking place at some point in the second half of the next financial year. And therefore, I think the adjustment that is probably happening in terms of the deposit scenario, and it's not just for HDFC Bank, it's for the banking system as a whole, you will see some element of margins being compressed. But quarter on quarter, it should be relatively better off compared to a year on year. But overall, I think the performance should be better off. With the merger of HDFC coming in, the expectations largely of the client pool that they probably have, the asset base that they'll operate out of, and more exposure specifically towards the home loan stroke mortgages part of the business, and cost and revenue synergies as well. That should start getting built in as we head into the next few quarters. So expecting a steady state numbers coming in from HDFC.
All right, expect a steady set of numbers. But this morning we have news flow that the RBI is proposing tighter norms for deposit-taking housing finance companies, right? They will be mandating rather HFCs to have a higher liquid assets to meet their obligations. My question to you is, are housing finance companies well capitalized? Do they have to raise more capital? And which are the stocks that will get impacted because of this tighter norms?
So I think, Nandita, the lower rung housing finance companies might and shall take a hit in terms of the norms that are probably put through, because with elevated provisioning expected to come through, and also the tightening in terms of the risk-weighted norms, specifically when it comes to this part of the segment as well. The lower run housing finance companies might have some issues in terms of both the capital raise, which might be dilutive in terms of their overall book value. And therefore, I think the better run HDFCs, the stronger HDFCs, the stronger HFCs as we see it, including the likes of an HDFC as an example, or a Bajaj Finance, where capital adequacy is not an issue even now. The expectations in terms of strong credit rating profiles that they carry, and a high percentage in terms of provisioning that they've done to their overall risk-weighted assets compared to their overall balance sheet, I think they remain in a very, very strong and robust situation compared to the lower NBFCs. So I think focus on the larger, better placed NBFCs, because they will be wading through this situation far better than the lower ones.
Right, that's about the NBFCs, but what about the IT pack? Last time we spoke when TCS and Infosys reported the numbers, we were playing guessing game as to whether or not the stocks will open in green or not. But over the last 2 sessions, the IT index itself is up 7%, and Infosys took off like a rocket on Friday, right? But now we have all the big 4 numbers in front of us, HCL Tech, Wipro, Infosys, TCS. Among the 4, do you think HCL Tech is the best place now, given the fact that it has reported industry-beating revenue growth? Because a lot of queries are trickling in this morning on whether or not one should look at HCL Tech from the IT pack? And secondly, now after this rally, do you think stocks are now priced to perfection, or would you be a little uncomfortable with valuations now?
Well, I think the street was expecting a worse sort of number, and what a large part of IT companies so far, specifically the larger names, have delivered has been better numbers, and the commentary has been very, very encouraging. So to that extent, the expectations that are now getting built in, specifically for the next financial year and the second half of the next financial year, that they'll be operating out of an environment where order flow should be reasonably well placed, where pricing and demand should not be an issue, and key sectors like BFSI, manufacturing, retail should bounce back very, very smartly. Having said that, I think the kind of moves that came through post results was expected based on all these factors put together and the sheer under ownership of large cap IT stocks as a whole. From a valuation and a stage perspective, as we look at it at MarketSmith and CanSlim, the methodology that we follow, I think valuations for TCS have always been expensive. HCL Tech was expected to give a stellar show because this is a seasonally strong quarter for them, considering their product business that they carry through. And valuations to a certain extent are not as expensive compared to mid-cap IT as we speak. So I think that bridging of gap that probably happens, the under ownership and expectations of strong growth coming through in the second half of the next financial year lays base for a good scenario as far as risk reward is concerned for IT sector. So generally, I think the stocks where their momentum is concerned should continue their momentum, expecting Q4 to be equally stable compared to Q3, and all these factors probably playing out for them.
All right, expecting Q4 to be as stable, as Q3. But Mayuresh, I know, we have to let you go. But just one thought on Tata Consumer after the acquisitions they have announced. Do you think it's value accretive for shareholders?
Yeah, I think they're doing the acquisitions in the right spaces, and the kind of portfolio that they've built up over a periodicity of time, where they started off 5-6 years back with just the salt and sodium carbonate business, getting into Sampan, the spices part of the business, and probably the kind of acquisition that they've done in the past 2 days, the Ching's acquisition as an example, is in the right direction, because what it does is it gives them an appropriate mix in terms of the product profile that they've got. They're already building up a huge distribution chain. And therefore, I think a mix of both these factors will ensure that there is reasonable amount of volume growth. They've got enough arsenal in their kitty at this juncture to probably target all markets, urban, semi-urban and rural markets, which is the key as discretionary spending kicks in over the next few years. So I think in the right space, earnings over the next few quarters and years should have a steady state compounding growth as we see it, and therefore anybody holding should definitely hold on to that.
All right, that's a view on Tata Consumer. I'll not keep you for longer now, Mayuresh. I know you have to go, but thanks a lot for taking out time and joining in and sharing your thoughts with us. Always a pleasure chatting with you.
Thank you. The pleasure is all mine. Thank you.
Thank you. Well, coming back to Sacchitanand then. Sacchitanand, I want to talk to you about some of the metal companies. Of course, today we have Nalco, Hindustan Copper in focus, given the fact that Khanij Bidesh India, which is a joint venture between Nalco, Hindustan Copper and Mineral Exploration Company, has signed an agreement with an Argentina-based state-owned company for the first ever lithium exploration and mining project. Now, it's a big project, and the pact is to explore and develop 5 lithium blocks in Argentina. If you look at the stock, Nalco was up fairly, up somewhere around 3% or thereabouts, but Hindustan Copper has, kind of cooled off. If you see the last 5 days, the stock has given negative returns. But on the charts, how are you reading into some of these metal names now?
Well, the entire metal space still looks promising. Recently, we saw a very good firm breakout from its contracting triangle formation on its weekly scale, which is still exhibiting a price extension towards 8,300, 8,340 kind of a zone on an immediate basis. So any declines or consolidation here should be a good opportunity to get into some really good meaningful names. When we look at Nalco as a space, it is still not surpassed its 2008 highs, and it is lingering near that particular level. Even if you look at the immediate data, there is a good chance that this particular level may be surpassed during this particular rally itself. and we may see the stock, scaling towards 165, 155 kind of a zone. So from a position perspective, this particular stock can be added in one's portfolio. Keep a stop loss somewhere close to around 120, 122 on a weekly closing basis. The other space that we are liking is Hindalco. Even here, we have already seen a very strong, secular bull run, ongoing, and we have already seen a decent correction from the highs of around 630. The stock is now stabilizing near its 20-day exponential moving average, which is around 570, and we are expecting that again the stock could see a lift off, which may clear that resistance zone at around 630, 620 kind of a zone. And we may see a rally, further extended towards 655 levels. So, even here, some long positions can be built in. The base at 570 looks promising. Probably we can keep a stop loss somewhere close to around 555.
All right, that's the view then on both the stocks. And Funny PG wanted to know your thoughts on this particular one, on whether or not one should buy. But buy on declines is a strategy here, according to Sacchitanand. But let's take up the next query now. This one is coming in from Hemant Jaju. Wants to know, among EV bets, which are the stocks that are looking attractive on charts, be it an Electra, JBM Auto, or even Ashok Leyland for that matter. Which one is looking more promising now? Do you think Electra is one that stands out after the stellar up move that it has seen over the last few months?
Well, Electra, we have already seen a very strong, vertical rally here. Probably, the stock needs to cool off a bit. If you look at the pattern formation at around 1450, we saw a very strong, continuation accumulation pattern breakout at around 1450, which exhibited a price target somewhere close to around 1800. I think that particular target has been achieved. So I think on an immediate basis, probably we may see some cool off for consolidation here. And again, we may see the next leg of the rally pushing the stock towards 2100, 20,000, 2080 kind of a zone. So I think on a decline, he can consider this stock, keep a stop loss somewhere close to around 1540. And accumulate in case if the stock slips towards 1600 levels. When it comes to Ashok Leyland, again here, the stock is just consolidating. There is no major, signs of a very significant momentum built up. But I think the stock has primarily been a very gradual mover. So we may see the stock again swinging back towards 190 eventually. But the floor looks well set at around 170. So probably keeping a stop loss somewhere close to around 168. Even this particular stock can be added in one's portfolio.
All right, that's the view then. Hope that answers your query. But before I take up the next query, what are your thoughts on ONGC? Sacchitanand, of course, government has slashed the windfall tax on crude. That is another positive. Yesterday, the stock was up nearly 4%, among the top Nifty gainers. Do you think there is, a case to ride the momentum on some of these oil and gas stocks?
So from a structure perspective, we expect this particular rally to extend towards 265. But if you look at the momentum, which has been very vertical since the stock, broke out from that 210 cluster. So I think we may see one more leg on the upside, but it's better to, buy this particular stock on a decline. As of now, there is a good amount of confidence that the stock may not, slip back below the 200 mark. So probably keeping a stop loss somewhere close to around 205. On a decline, it can be considered. The price target that we're expecting on the higher side is placed somewhere close to around 265.
And what about a GAIL? We have a query coming in from Sai Reddy on GAIL. What are the kind of targets you'll be watching out for here?
So GAIL, even here, the anticipated target is somewhere close to around 185. Here, probably, in case if the stock starts trending above the 168, 170 mark, one can chase momentum. Keep a stop loss somewhere close to around 160. But in case if that particular level is not breached, then probably we may see some more time and price consolidation here. The eventual base is firm at around 150. So in case if one wants to add this particular stock from portfolio perspective, they can keep a stop loss somewhere close to around 145. and on a decline towards 155 can be accumulated. From a trading perspective, the level which is significant is 168. In case if that particular level is breached, the rally towards 188 would be very quick.
All right. I hope that answers your query. The next one is coming in from Anant Upadhyay. Wants to know your thoughts on an India Bulls real estate. He wants to know, he already has some position here. He wants to know whether this is the time to take profit. Realty stocks, have seen a stellar run, and in the last 1 month, India Bulls real estate in particular is up 8% or thereabouts. But do you think one should wait it out before booking profits?
As a space, I think there is still more upside which is left. But if you look at this particular stock specifically, it has been one of the laggards. Even here, the stock has started performing decently. There was a major hurdle at around 90-95 zone, and that particular hurdle has been crossed on a weekly basis. But the price action is not that very significant. So probably, he can keep trailing his stop losses higher. As of now, the base at around 84 looks promising. So probably he can keep a stop loss at 82 and review his positions somewhere close to around 110, 105. So.
Right. I also want to get your thoughts on a Jio Financial. We have a query coming in from Nasir on the same. The numbers came out yesterday. We have a few brokerage reports also this morning. Jeffries is saying that, of course, the focus is more on consumer loans and supply chain finance. And the company has also, applied for license, in the mutual fund, for its mutual fund foray along with BlackRock. It's awaiting regulatory approval for the same. CLSA has, also, come out with a report. It's saying that the company is taking a calibrated approach to unsecured lending, and it's focusing on growing secured loan products. But on the charts, Jio Financial, some of our viewers want to know how they should go about trading into this one. Any advice here?
So we don't have any significant development here when it comes to the immediate action. We've already seen a breakout at around 250 zone, and the rally has been very quick towards 270. But since we don't have much data to conclude, probably it's better to continue with this particular momentum, keeping a trailing stop loss strategy. As of now, yesterday's low would be very significant until unless we don't see the stock slipping below 255 zone. We may expect that this higher top, higher bottom bullish sequence may continue, but it will be very difficult to derive any price targets here. It's better to continue with the momentum with a trading stop loss strategy.
All right, keep stop losses. That's the view. Hope that answers your query. Very quickly, your view on a PNC Infratech. The company is in focus. It will be selling 12 special purpose vehicles to Highway Infrastructure Trust for an enterprise value of 9,000 crore rupees. And I think over the last 5 sessions, it's already up somewhere around 10%. Do you think the rally will cool off a bit from here, or do you think perhaps get onto the bandwagon now and look for higher levels here?
So the price action has been very good and very it has been sustaining throughout the last 4 months above that 350, 355 zone. So I think we may see this particular support being respected. Even if we see some cool off, I think 370, 365 would be a good zone wherein the stock can be accumulated. Eventually, we may see this particular stock, scaling towards 440, 445 zone. So I think even declines would be healthy. And from a momentum perspective, I think one can keep a stop loss somewhere close around 355 from here on.
Right. Lastly, thoughts on Polycab. Vijay wants to know what one should be doing. Should one buy now? Because after last week's rubbing, it is attempting to make a comeback. Over the last 2 sessions, it has ended in the green. So do you think buy now, or the sell-off will resume after a certain point?
So following the price trend, still there is nothing significant development on the price action. Certainly, after falling so much, this price is just stabilizing here. but there are no any significant chances or signs of a reversal formation here. So probably it's better to avoid this particular counter and wait for a very clear decisive price reversal sign, which is still not evident on the at least on the daily scale. So probably we may see a marginal pullback here, and again the rally on the lower side may continue.
All right, that's the view then on Polycab, but we've come to the end of this query segment. Sacchitanand, before I let you go, in terms of stock recommendations, what do you have for viewers this morning?
So since the focus is going to be on Nifty Bank, clearly the way ICICI Bank is, reversing, we are of the opinion that the stock would eventually scale towards 1035, 1060 kind of a zone. So from a trading perspective, we are recommending building long positions here. We are expecting a cluster breakout soon in this particular counter. A stop loss can be placed somewhere close to around 998. And from a trading perspective, we may see a quick swing towards 1035. But eventually, we see this particular stock scaling towards 1065. The other stock which has been on our radar, even this was discussed last week on this show, is Kotak Mahindra Bank. If you look at the weekly structure, it has already seen a very strong support at the 1800 base. From there, we have seen a breakout from a declining wedge formation. Now, declining wedge is a sign of fresh bottoming out process. And this particular pattern is also coinciding with the support at around 1820, where its 200-day exponential moving average is placed. So even here, we are seeing a very significant bottom in place, and we may see a very strong rally built up. Eventually, we see the stock scaling towards 1980. But from a trading perspective, we may see a quick swing towards 1905. And that's why we are recommending, chasing long positions here with a stop loss at around 1832.
All right, that's the view then. Two banking stocks, ICICI Bank and Kotak Bank. These are the recommendations from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining in and sharing your thoughts with us. Always a pleasure interacting with you.
Thank you, ma'am.
Well, with that, we've come to the end of this edition of, Morning Trade. But just a reminder for viewers, we have a new listing at 10 a.m. today, Jyoti CNC Automation. That is expected to list at a premium of 15 to 18% of its issue price of 331 rupees per share. So watch out for that one. But with that completely timed out, thanks a lot for tuning in and sending all your stock related queries. Keep them coming in. We'll try and take them up. And if you don't take it up on a particular day, don't get disheartened. We'll try and take that up the next day. But thanks a lot for tuning in from me and the entire team. Stay tuned because coming up next is Opening Bell.